Warren Buffett's interpretation of financial reports. Number 3. What kind of business would make Warren super rich? Wall Street is full of highly skilled, not so hot stock pickers. If the stock doesn't go up in 2 years, they sell, sending prices up and down to suit their needs, never caring about the long-term economics of the business. Warren learned value investing from Benjamin Graham. He learned to spot undervalued situations by reading the financial reports, looking for what made them fantastic long-term investments. The lower the stock price, the longer time he had to profit, profiting from the underlying economics, the company's competitive advantage. This meant his risk diminished and potential gain increased. He realized investing in a company with a durable competitive advantage would make him super rich over time. Another tip from Learn Accounting Fast. Next, looking for the exceptional company.